Yeah, so like I said, my name is Armando, Pantoja. I talk about Tycoon. I talk about finance. I call myself the strategic millionaire. So I found
multi-millionaire.
Multi-millionaire.
Put some respect on it. Come on.
I found ways.
3, 2, 1. Welcome back to the newest episode of the Real Estate and Chill podcast. I'm your host, James Chattery, Finance by James on Instagram, here with
Kevin Iglesias, associate real estate broker. Again, another $1 million episode. We're here at the Brooklyn Bank. Shout out to Drew Bernard for giving us a space. If you need an event to have a party or anything, contact Drew. The Brooklyn Bank is here. We're with the man, the myth, the legend. I'm sure you follow him. The mailman follows him. Everybody follows this guy on Instagram, right? Stocks, crypto, tech, everything you need to know. He's a go-to guy. We got Armando Pantoja in the building, AKA Tall Guy Tycoon.
he's actually tall. It's not just that.
6'6".
Yeah, 6'6".
Man.
Or maybe he's shrinking. I'm getting
Yo,
older.
Lou, he has to stand on his window and be as tall as you, man. So please introduce yourself.
Yeah, so like I said, my name is Armando Pantoja. I talk about Tycoon. I talk about finance. I call myself the strategic millionaire. So I found
Multi-millionaire.
Multi-millionaire.
Put some respect on it. Come on.
I found ways to make money down per traditional and untraditional paths all my life. So I use using strategy and just rational thinking. So
That's awesome.
So tell us how you got into it in the first place. What's your story? Tell us your background.
So my background is so we go all the way back. I was born in Virginia. My father was in the military. My mom was a military wife. He left us shortly after that. We moved back to Tennessee, where my mom was from. So we had to move back to the project. It's a project called Summit Heights in Tennessee, and that's where I kind of grew up, around that area. So after that, I ended up, not doing too well in school. I was an outlier, kind of. I paid attention in school, but I never was I was always paying attention to the wrong things, right? So if we're on chapter 1, I'm on chapter 13. So when the test came on chapter 1, I would fail the test, but I knew everything in chapter 13 and vice versa. So I would read the book and understand the content, but not in the same order that they wanted me to do it, right? So I still got all the content, which is a whole nother thing. I don't believe in the way the school system works because of that, but that's another subject. But as I moved later on down my path, high school, I decided to go to college. And in college is where I found my calling is computer science. And when I got into that, I figured out that was one of my passions is computer science, right? So I finished with a computer science degree. I went and played basketball 2 years in Puerto Rico after that. But when I got back, I started working for an artificial intelligence company called EdgeNet in Tennessee.
Wow.
And I was a software engineer for about 4 or 5 years. I started a company when I was like 29 called APN Software. That was my first company I ever started. So the first 2 years it did great. I was making well into the 6 figures. Tried to expand too early, put all my money into expansion, and it was actually made a bunch of mistakes and ended up going close to bankrupt from that company. And that was one of the biggest setbacks in my life, right, is that it hurt me emotionally and it hurt me monetarily, right? Because I ended up being like $160,000, $170,000 worth of debt. I had a newborn son. And I had a daughter on the way at that time. So after that, with a heavy heart, after the business failed and I had to close everything down, fire everybody. It was one of the most depressing times in my life, right? It was like a couple of years where, I was just like really depressed. But during that time, I went back to being a software engineer for AAA. And it was actually a great company, right? AAA, like the Auto Club Group. It was a great company, really, and they paid me a high salary. But to pay that loan back at night, I was also a teacher at a college. So I was working like 12 hours a day, every single day for 2 years until I paid back that debt, the business debt, the bad business debt I had. And then after that, I still had that business. I was like 33. I had there's still that business urge. I really wanted to go back into business. So I started a company called ICO Ranker, right? But this time I got a business partner, which is a lot easier. You guys work together, and it's a lot easier when you got somebody working with you, a lot easier.
You got somebody to blame.
You got somebody to blame, you got somebody to bounce ideas about. That's one of the things I wish I would have had earlier as a business partner. You got to have somebody there, right? It's exponentially more difficult to go on your own. You know, because you don't have anybody you can, at least like some of the stress, like just talking about stuff or sharing like experiences, or like sometimes you may come up with an idea that's like completely wrong and the other person can see that mistake, and he'll tell you or she'll tell you, and you're like, oh, that makes sense.
Yeah.
It makes things a lot easier. So I got a business partner, started a company called ICO Ranker. What ICO Ranker was, it was a company that ranked cryptocurrencies, right? So it was an algorithm back there that what it did is that it was back in 2017. It was the third crypto boom. And during that time, it was something called ICOs. ICOs were initial coin offerings when coins first came to market. Yeah. So it's like the NFTs of them days. Like every time there's a boom, there's a new exotic instrument like that that everybody goes crazy over. Back then it was ICOs. This time it was NFTs. But it was ICOs back then. So we made a website called ICO Ranker. And the reason why I did that is because I knew of a concept it's a concept in business called the pick and shovel strategy, right? And I've used that in the last two crypto booms to make a lot of money. The pick and shovel strategy.
Yeah, I was going to ask, what is that?
Is in 1849, there was a gold rush in California, right? And it's just like any other trend. It's like the trends we experienced there. It was a trend, right? So they discovered gold in California. That's what the 49ers are named after, the San Francisco 49ers. In 1849, they found gold. So all these people came in and they got rich off the gold, right? Then in the newspapers, it was published all over the United States. So what is that going to cost? A second wave of people coming in to get the gold. Now, the first wave of the people got all the gold. There's no gold really left. It's going to be more difficult with each additional wave. So a smart man says, well, you know, if I know what the next wave is, what does this next wave need? They need picks and shovels. The second group of millionaires was the people who sold the picks and shovels to the second wave of people coming to look for gold.
Wow.
So in all trends, it's like this, you know, like you're a mortgage broker. I bet you made a lot of money during this boom. Yeah. Because you were on the opposite, you were on the supply side of things during the booms, right? So supply side, a lot of people don't see that. They follow the trend with the masses, but you put yourself on the opposite side and supply those who are coming in on the second wave, you can make a lot of money. And that's what I did. So I was like, you know, I want to be the one that supplies information of upcoming ICOs. So what we did is we created an algorithm that would check a new coin as it came out, and it would check its team, what industry it is in, all these other metrics, and it would compare it to other successful coins to try to predict the probability of success of this coin. And it was every coin had a report, and we ended up getting like 1.2 million visitors a month on that page.
Wow.
So we were making like at the time like 50.
So familiar.
Yeah.
Like, I feel like
you probably saw it because at the time it was the top 3 in the world. It was the
Honestly,
third biggest site.
I wouldn't be surprised.
If you were in the ICOs, you were on that site.
I definitely was.
Guaranteed, yeah.
That makes sense.
So yeah, you were on that site, guaranteed. Because it was the third. It was ICO Bench. It was another one, and ours was number 3. So we're getting like 1.2 million hits. So we making 50 to 75,000 a month in ad revenue during that time. So 4 months in, we got an offer to buy it for $2.5 million. That was in January of 18. So we took it, and I was a millionaire at that point.
Amazing.
Yeah. So with the revenue from the company, and also with the I was a millionaire, right? So that's when I became a millionaire. I was like 35. So at the time I was still at AAA, so I kept working. So I was like, well, what am I gonna do? I had like after taxes about a solid $1 million. And so I was like, well, what am I gonna do with this, right? So I was making a lot of money at AAA too. So I was like, well, it's not really enough to quit, you know. A lot of people would have quit, but that's a mistake. Because I was making like 180 at the time.
So you were doing your own company, and then you were also working
both
at the same time.
Yeah.
That sounds like a lot.
It was a lot, yeah. So I took that money and I was like, well, you know, I have to invest it. So I started investing in crypto stocks and stuff like that, put it in places. Then after it was properly invested, that's when I finally quit. You know? Yeah. So when I could make, you know, the passive income kind of replaced what my income was, that's when I quit. And then in the pandemic, second wave came, I invested more money and made a whole bunch of money right before and leading up to and during the pandemic. So and ever since then, I've just been online teaching people about how to think rationally and how to see situations from different perspectives to make money in real estate, stocks, crypto, and a lot of other different ways.
Let's rewind back, and I don't mean to interrupt you. You failed miserably, right? And then you had to get 2 jobs, work those 2 jobs to pay that back debt, and then you sold the company. It was millionaire.
Yeah, but if I would have gave up the first time, and a lot of people told me, like,
Nuts.
I remember my mom told me, she was like, why don't you just stop? I mean, like, you know, like, I don't want to see you go through that heartbreak anymore. Like, it was bad. Like, I couldn't stop because I knew the mistakes from the first time. And I was like, well, if I just fix those mistakes, it'll be successful the next time. And ever since then, after I paid the debt off, everything I've touched has been successful.
It's amazing.
It was like before, everything I was doing was turning to dirt. Now everything turns to gold.
That's amazing. Because usually when people hit rock bottom, it's like, I'm not doing this ever again. But you knew there was flaws in the system that you had, and you're like, all right, I know how to correct these now. Let me give it another shot, which takes a lot of courage, a lot of self-faith too, because you have to believe in yourself 1,000%.
Yeah.
So how long was that like period of like you starting ICO Ranker and then you selling it? Like how long were you inside?
I had ICO Ranker like 6 months.
That's it?
Yeah.
Wow. So you made $2.5 million in 6 months?
Yeah.
Just based off one idea?
I saw that on the Shade Room. They reported that.
Yeah,
I saw you reposted,
It's like at the time, it was the biggest sell on like a crypto website in history. It wasn't that. It's not that big now because crypto is growing a lot. But back then, I was on the Shade Room for that. Like, and that's really what got me into like the Instagram stuff is because when they put me on the Shade Room for that, like my Instagram account went from like 200 to like 12,000 overnight.
Wow.
And then everybody started asking me how did I do it, how can I help them? And I was like, well, you know, I used to be a teacher. So I'm gonna start teaching this too.
Wow.
You're a finance and business coach as well, right?
Yes.
Awesome.
So you do everything finance related?
Yeah, so really what I'm trying to do is, what we do in my classes, courses or whatever, or groups, is that, like we'll tell you how to trade options, we'll tell you how to, because I've done all of that to make money. Options, stocks, crypto, and I'm getting into real estate like I told you. When I get a hold on that, I don't feel like I'm at the point yet to teach that. But once I get 2 years, 3 years in, I may be at that point. But I want, because all of this is like these sub skills, right? The umbrella over that is like a mindset. And we really want people to believe, to see, you know, think like that to be able to see those opportunities in those subset skills. And that's where you really got to be. And it's in that umbrella, it's like you have to be able to see money as abundant.
Yeah.
And that's the problem is that a lot of my life, a lot of my mistakes, especially in that first company, is because I saw money as scarce. So I felt like that if you know, because money is so hard to get, it's so scarce, I have to be very careful with it. So I misstepped on ads. I misstepped on building the right funnels, building the right teams, because I was so cheap. Because cheap people see money as scarce. That's why they're cheap. Because they don't feel like, well, I can't replace this money, so I have to be very careful with this $20 I have now, because it's hard to get another $20. But if I feel like, well, $20 is easy to get, I could just, you know, you could spend it a lot easier. So that's part of the umbrella. Strategic thinking, abundant mindset, being able to understand trends and position yourself in the right places in trends, being able to understand market cycles. All of that is in that mindset, and that's really what we teach. And then everything else are just like subsets to that.
I really like that, like, because I think that the way you broke it down was very like true, and you can go down to like even anybody who's watching this can relate to that. You know what I mean?
Like a true bit. When you teach somebody the true principles of business, and I heard a man say this when I was younger. He said it was a very successful businessman. He had 30 exits, and he was speaking at a conference. And he said you could put me in any business. I don't care what it is, and I can make it successful because business is business. It don't matter what the product or service is. He said, I can make it. And that really struck with me. It's like if you have that mindset, it's easy to see the opportunities in the instruments you use, like options, real estate, or whatever. Yeah. You know?
It's all like, also like what you're willing to do as well.
Exactly.
How much you're willing to work in the space. So I believe, yeah, that's 100% true.
What's impressive is that, you know, you made over $1 million, right? And you didn't blow it, which most people do. Most people who hit the lotto, they go broke within the first year. They buy Ferraris, Lambos, designer.
That's the problem.
They're invested
I knew about that.
Yeah, they're invested into things that just don't bring back money. There's no value in it. But they say, you know, it's easy to become rich. It's harder to stay rich.
As I said, to maintain it is a lot harder. Anybody, like lottery winners, 4 out of 5 are broke in the first 5 years. And it's because any problems that you have with money right now, let's say if I make $50,000 a year and I can't manage that correctly, let's say now I got $5 million a year, the problem has just been scaled up. If you can't manage that money, you can't manage. People always think if I had more money, it would solve the problem. No, because your wants and your desires go up as well. And if you mismanage that, you're still going to be in the same position. That's why they even say that a lot of people, regardless of income, live check to paycheck, regardless of income. because it doesn't and I'm sure a lot of people listening say, as my income goes up, it still seems like I don't have no money. That's because they're not managing the money correctly.
Yeah.
Like I remember when I was like younger, I made $45,000 my first job. And I was like living paycheck to paycheck. I was like, well, if I had more money, it would be different. Now I'm moved to 100. I'm still living paycheck. How is it? Because it's because your living expenses and your expectations are going up with the income.
Yeah.
Yeah.
As you get more money, you get a bigger.
And that would go all the way up to $10 million. It wouldn't stop. Like people think if I had more money, it would solve everything. No, it wouldn't. It would just be in the same position.
Yeah, and that's true. And like I realized that, like, you know, rewinding into my career a little bit, I was realizing that, like, as I was growing, making more money and stuff like that, I wasn't saving as much as I wanted to. So like I don't think it's a bad idea to budget, like, how much money you're going to spend on certain things, you know, like set a budget for yourself and stick to it, and that's it. You know what I mean? And one thing that kills people is like credit cards. Like credit cards has been like, credit card numbers have been going up recently, like credit card debt, and it's killing people right now because, you know, they can't afford to make these payments. They think money's like free on a credit card, but it's not. It's more expensive on a credit card.
Interest is a silent killer. That's the only thing about it. It's like the average American, I think they had since like $700 a month in just interest payments. Wow. That's a lot of money, you know. And that's the silent killer that people don't even, like people look at, like if I get a bill for my mortgage, right, and it says like $2,000 or whatever. People don't understand, so, oh, this is what I have to pay to live in this house. But part of that is interest, a big part of that. And people don't really realize that. In the car payments, they don't realize that. And the credit card payments and all these other things. Everything has interest, and that interest adds up. So one of the keys is getting rid of interest, you know?
Yeah, I mean, the more you can get rid of, I think that, like, getting rid of interest on things you don't need is vital, but also using, like, interest or just leveraging whatever you can, getting the money you can for businesses, for real estate, and for whatever else you may need. For cars these days, because people are renting out cars on tour too. They're making a lot of money off that too.
Yeah, that's the only time I believe in business credit is that, like you said, you're going to make money off of it. Yeah. That's the only time you really should use credit, unless you just have to, right? Like, unless you know, like Futuro is a good example, or like real estate's a good example. Like if you're going to make more money than the interest payments, then it's worth it.
Yeah.
What would you say, again, this is not financial advice, but just your opinion, what would you say is a better investment as far as like real estate and stocks? Like what would you...
That's the clash between the two.
Yeah, because everybody always compares them. Like, all right, I'd rather invest my money in stocks, or I'd rather invest my money in real estate. Some people are 50-50, but some people are like, nah, I'm not investing in stocks. It's too much of a risk.
We got to refine the question. We got to make it more like in-depth, because that's a very broad question. So let's say you had, $100,000. Would you go for stocks first, or would you go for real estate?
Again, this is not financial advice.
Right now?
But you can't,
it depends on the time. It depends on the time.
I would say
I think real estate's overvalued now.
You have a 1 year span.
Like right now, I would put it in stocks. I think stocks are
But you can't sell it for 30 years.
Even now, because stocks are so low, and I think real estate is going to take a hit soon with the interest rates being so high. So I would put it right now. I'd put it in stocks, but like that argument is it's a pretty deep argument, right?
Yeah.
There's no clear answer really. It depends on the time. It depends on what you want to do and your own personal lifestyle, because real estate requires a little bit more at work, right? Unless you like me, I got a a property manager to manage mine, because I'll try to create passive income streams.
Right.
So I'll take a little bit. I have to pay them, the company, but I don't have to deal with anything. I don't have to worry about fixing stuff to tenants calling me. That's important to me. It's like, is to preserve my time during the week. So I have those ran by property managers. But with stocks is that the return is about the same. But the good thing about real estate is it's a tax write-off because of depreciation. So you get that benefit. And with stocks is like, you put your money in stocks and it's completely passive because you don't have to do anything. But you have the taxes that get you a little bit worse. Right. So it's a balance there, right? Is that it's almost 50-50. And it would depend on, to me, it would depend on the economic environment right now. Like right now, I think stocks are lower than what real estate should be. So I invest in stocks, and when it recovers, you make more money. But let's say if stocks and real estate dropped, I would probably put it in real estate. If they were both, if I believe they both were at a bottom, I would put my money in real estate.
Interesting.
Very interesting. Yeah. So I don't invest in stocks. Everything for me is real estate, right? So I'm asking you this question because I don't know. Is there a stock that could go to zero? Yes, right?
Yeah.
See, for me, when I'm looking at it, like, all right, what should I invest in? a real estate, like a house is never gonna be worth $0. Like it's always gonna be worth something, even if it's destroyed.
That situation. See, that's the thing about it. We don't think about these extreme situations where it could go to zero.
But
Like,
I feel like there's never been in the history.
A blue chip stock going to zero is an extreme situation.
Like
Let's say, I'll tell you how real estate can go to zero. If let's say China invades, you know when they invade, they take the land over. You don't own it, the real estate don't own it.
That's true. That's true. All right, so that's true.
It's dead. Now it's China's land. A lot of people in war zones have lost their entire net worth.
I mean, that's a unique situation.
Same thing with stock going to zero. Apple going to zero, it'd be bad.
If Apple goes to zero, then I don't think we should be worrying about.
It would just overnight. It would be bad, But it may be over 10 years, but.
But one thing about real estate, there's always a sentimental value. Like I've sold a couple of houses that I'm like, yo, I would not want to even use the bathroom here.
Even in Latin America, Venezuela nationalized all the American houses there and just took it from them. It's theirs now. So it's situations where your real estate before it could go to zero overnight.
I'm saying
that's why I like to balance risk. That's why I want to put all of them, because you'd say it sounds crazy now, but COVID sounded crazy 5 years ago.
That's true. That's true.
Things happen.
We live in unpredictable times.
It doesn't seem real until it's happening. Then you're like, oh, I guess it can happen. So no, if you would have went back, I remember if you would have went back to like 2000, let's say 17, and explained to people this COVID situation, they would have laughed at you. Come on, man, that's not gonna happen in the U.S. That's crazy. People wouldn't even believed you.
No, people were saying, like, before COVID happened, they were saying, like, we were due for, like
a lot of the thought leaders, though. But I'm talking just general population people, they would have been like, that's not going to happen.
I mean, I was one of those, when I read that, I was like, yeah, that's not going to happen. I was like, that's
But even before that hit, I used to see, when you used to go to, like, New York City, Times Square and everything, you used to see a lot of people wear masks before even masks were a thing. And I was just like, damn, this is crazy.
Yeah,
I went to school in the city, and people were wearing masks when, like, nobody even knew what it was. And I was like, but it was sudden. Like, you knew that people were starting to wear masks. I was like, what the hell is going on? Like, why are people doing this stuff? And then you find out, and then, like, you see more people wearing masks. I was like, I'm not wearing a mask, whatever. And then we shut down, and I was like, all right, I'm gonna stay home.
Yeah, a lot of people were like in denial for a long time. Come on, it's not happening. But that's what would happen if something big like that, like an invasion or something happened. They're not gonna do that till it happened.
Yeah. But when COVID happened, we saw everything like come back. We saw stock prices. It's considered, it was over 20%, so we consider it crash, right?
Deep, it was 30 something, yeah, it was
Crypto
deep.
as well, Bitcoin went down to under $4,000.
It went to 3,500. I bought some at that. I was on
Smart.
YouTube, I actually had a post that's like one of my most popular. I said, if I were you, it went to 3,500. I said, man, you better buy it now. A lot of people bought it at 3,500.
I was watching it at 3,500. I was like,
I think we bought like 15 of them at 3,000. Yeah,
and you kept it?
Yeah, I still got it.
So what about right now? Like, do you think Bitcoin's still gonna hit the Bitcoin charts of like Bitcoin? Like now it's saying they're at the lows, and like you think that
it's a 4-year cycle in Bitcoin. It's every 4 years there's a process in Bitcoin like code called the halving.
Yeah.
So that drives the prices higher. What it does is that every 10 minutes right now, 6.25 Bitcoin get created through the mining process. Like you ever heard of Bitcoin mining? That's what it is. Like that's how they create Bitcoins, right? Through that process. So 6.25 get created, but every 4 years that's cut in half. So 4 years ago, roughly 3 years ago, it was, in May of 2020, it was 12.5. So it got cut, and then about 3 or 4 months after, we saw the price of Bitcoin responding to that. That was one of the reasons why Bitcoin went to almost 70,000. So it's been going like that every 4 years.
So I feel like it's kind of known at this point. So it's like.
But if it's known, what's going to happen, I think, is that it's not going to be like right now. People don't know that, so it gets cut, and then it's a delay, and it goes up. But now people know. I think it won't be a delay anymore. It'll probably start happening before the halving even happens.
Yeah, you got to get in like a year before. At least.
I don't think it would be like it has been in the past, where you see the halving, 4 or 5 months wait, then it responds. It'll be before that, because people like in stocks, people anticipate earnings calls because they in the stock will start going up before that. I think that's how it'll look in 2024 with Bitcoin. And we'll start seeing it rise in late 23, maybe.
That's not even that far away.
I know.
Surprisingly. But I think that, like, with everything going on with crypto, I think that a lot of people are wary of it because of that whole argument of, like, what is it? Like, who owns it? All that stuff. And, like, just would love to hear your thoughts on that.
Yeah. So the big thing of that is that people have been Bitcoin's been around. I'm 40. Bitcoin's been around since 2009. That's 13 years. That's half of my adult life. Half of my adult life, Bitcoin's been around. It's not going anywhere.
Yeah.
That's a long time, man. That's longer than a lot of, Instagram, I don't think has been around or been very popular that long.
Yeah.
So it's been around. Nobody says Instagram's going anywhere. It's because it's so contrary to everything we've ever thought about the financial system is that people are afraid. And one of the reasons is because the banks, the elite and the wealthy keep you afraid. Because they don't want you to look at this. They want you to look away. And if you look into the news, you'll see that like a lot of the big banks and the wealthy are buying up assets, buying up control of the crypto market. It happens all the time. JP Morgan will set up something. Bank of America will do this. You'll see these news articles over time, but then the same company would say, don't look at Bitcoin. Don't worry about it. That's not, but they're buying up, they're controlling it, right? Yeah. So I think over time is that the banks are trying to get the control over crypto. Once they get that full control, they'll like kind of almost market it to the general public.
Because that they're gonna say like they're gonna have their headline saying like, oh, we predict Bitcoin's gonna go to $500. When it does, they're the ones buying it. They're the ones
buying it, right? And that's one of the things people don't know about the banking and the financial system is that if you turn on like CNBC and you see somebody talking about, let's say Apple stock, right? And they're talking, Apple stock's going this, whatever. If you look at their name, it says like, let's say Jane Morgan is the woman talking. It's a Bank of America analyst. Like, where do you think she works? Bank of America. How many stocks does Bank of America on the short or the long side of Apple? So what happens is that they literally will tell their analysts to pump up or not pump up a stock. And they can't do that legally, but they know, you know which ones your boss got. You're gonna be less likely to that Bank of America bought, let's say $100 million worth of Apple stock. You're not gonna go on there and put it down. Yeah. You're gonna push it up, and that everybody on those talking heads, those analysts, all those analysts work for banks.
Yeah. I wanted to touch base on something because you brought something that sparked something. You were offered what, like $300,000 to promote like a weird crypto, no?
Yeah.
And you turned it down.
Yeah.
And now you see so many celebrities getting like hit with lawsuits and everything for promoting pump and dumps.
When Kim Kardashian posted, I posted on my Instagram. I told everybody.
Yeah, I saw that.
I said she's done. And it's another one. What's that guy's name? The rapper that did it. He's done too.
6ix9ine?
No, it was another one.
What would you even say?
He did an
He did
an NFT album. What was it? Tory Lanez.
Oh, Tory Lanez. Yeah.
Yeah, they're gonna get him eventually. They haven't gotten to the NFT stuff, but the way he I don't know where their legal people are. I didn't know. It's got to be some disconnect because when Kim Kardashian announced she was doing it, I said the same day she's gonna get in trouble. She's gonna pay for that because it's a way that you have to do it, and the crypto companies are smart because they'll pay you let's say $500,000 to promote it, and then you'll promote this thing, and then you don't even know who the owners are. Even the people that send you the money don't know who the owners are. They're just like a PR firm or something. So and then let's say 6 months later the coin just disappears. Nobody knows who created it, who did anything. So who's the only one on the hook in this situation? PR person said, I was just doing a job. You're the only one on the hook. You're the only one that promoted it.
So what were they doing? So they're gonna get caught because they knew that it was a.
No, because you're not supposed to promote a coin. You can't promote coins like that without disclosing that you've been paid.
Oh, okay.
So she didn't disclose that she was paid. But I wouldn't touch it at all. I wouldn't promote a coin getting paid at all.
Yeah, I feel like there has to be a reason.
It has to be. I got to be part. It has to be a big. I have to know. The people that have asked me to do that, I've always a couple of coins like that one I turned down because I think it was outright fraud, the 300,000. But a few people have asked me, hey man, promote this, like friends or people, associates, and I'm like, hey man, I got to see the code. I got to see everything before I put my name on it. And they were reluctant to give it to me. So I'm not going to, I know in the structure of they call them contracts, that where this money is going and how the things work. I would never put my name to a thing because if I don't know, then I'm liable, And I'm not only liable legally, I'm liable because I feel like I got a responsibility to people who listen to me, right? Is to only give them advice that I take myself. So
do you think that your background in computer science and being an engineer has kind of navigated your path through problem solving and the career path you're in now as like an entrepreneur?
Yeah, I use a lot of that. That's one of my biggest passions too, is to get more kids into STEM and coding. Because I strongly believe that everybody should take a coding class, or a coding course, because it helps you structure like you said, structure your thought process and organization, and be able to like navigate and like propagate through like problems faster. It does help you with that. It's like calculus and math helps you with that also.
Yeah.
But that's the reason. Like people, how people always say in school, they're like, "I'm never gonna learn algebra. I'm never gonna use this."
Yeah.
People always say that, but it ain't about the algebra. It's about problem solving.
Yeah.
You learn how to do this step, that step. That's what you're learning. The algebra is just like the instrument to do that. But you're really learning problem solving,
Yeah.
So, and people don't realize that. They think I'm never like figuring out the curve of a circle, but you're not figuring that out. It's the problems and the steps that you use to do it. That's what they're trying to teach you.
I'm never saying that again. I'm never saying I'm never using that again. That's true.
You will use it. Yeah, like that's what I'm saying. That's what computer science does. Like, you're never gonna program a computer, but now you are looking at a problem differently. You're breaking it down differently. You're stepping through it differently. You're organizing your thoughts differently.
You're just training your brain.
You're training your brain to see problems a certain way. That's what algebra and calculus is.
I like that.
See it as like something that needs to be subset and broke down to solve the problem. Like you get a formula and you break this side down. And that's what you're doing. And now if you go to a business deal, you take that big problem, which could seem like massive, and you break it down to smaller parts. It's the same thought process. So that's why it's important.
Honestly, like that, it makes sense for me, like why, like, so I went to school for finance, and when I was in school, bro, I was doing these page-long equations that I had to plug in, and these equations took like 5-10 minutes to do, even if you had the equation, just figuring all the numbers. You could plug in these numbers into something on the computer, but they're testing you on just being able to do it. They're testing how good you would be at actually getting that done. So that makes sense. I never really thought about it that way. And for anybody who's watching, you can't trash on school anymore. So, now you know.
People always say why am I taking algebra? That's the reason why.
No, I like that a lot.
So being a millionaire is very impressive, but you put the strategic millionaire in front of that. Can you break that down on? I mean, you're a very strategic person, obviously.
December the 3rd.
December 3rd.
So it's called The Strategic Millionaire.
Where would that be available?
It's available on Amazon and my own website it's going to be thestrategicmillionaire.com. But this book kind of breaks that down. I call it the 7 laws the rich don't tell you about wealth. And it kind of breaks down these concepts of being able to see things.
Can you give us a little sneak peek, a little insight of the 7?
Yeah, like law 7 is be lazy. And that sounds like, a lot of the stuff in the book is contrarian, against what you normally would think. We live in this hustle culture. You got to work hard. Kevin Gates even said in his song, "I got 3 jobs, I don't get tired." I don't know, but.
You don't listen to Kevin Gates. Yeah, I know what you're talking about.
I know that song.
But he says it all the time, in almost all his songs. But that kind of working hard, which I believe in too, but I believe you should be looking, because the thing about it is that to think lazy, and one time Bill Gates had a quote, and he said that if he had a choice, he would pick a lazy engineer over a hard worker. When everybody was confused, why would you do it? He said, because the lazy person is going to figure out faster, efficient ways to do stuff, because he don't want to work as hard. So that helps me out, because my programs are going to run faster and more efficient.
Yeah.
So that's the same thing with this, is that you only got everybody regardless, so you could be worth 100 billion, you could be worth nothing. You all got a certain amount of time in a day. You got to be kind of jealous with that time, because it's only so much. So the way millionaires think is that they're I can't use my time. I got to figure out ways to create passive income streams, delegate, use partnerships, or use automation to create money streams for me without me having to work. So by thinking lazy, you're actually thinking more efficient.
All right.
You're I'm not putting my own work into this. How am I going to make money without putting my own work into this? Then if you think like that and change your thinking to being more lazy thinking, you actually become more efficient.
You're trading hours for dollars.
Exactly.
That's
but you don't want to do that.
Because everyone has the same hour. It doesn't matter how rich you are. Everyone has the same 24 hours. That's something that you can't get less.
You can't get that. If you use up all your hours, you run to a max. It's an upper limit on that.
Yeah.
You can't go past that.
So that's 1. Think lazy. What are the other 6?
I give you 2.
You can't give us all. You gotta buy the book to find out.
I'll give you 1 more. Let me see. Another one, the third one is about being a trend spotter. And that's when we talk about the concept of getting on the supply side of things. We talk about how trends work and how to spot trends, because that's another life hack, is that rich people, like the thing about rich people is that in society there's like a financial information flow, right? It starts at the rich and it comes down to the bottom. It's like crypto, for example, right? Rich people knew about that before us. I got into it like 2013, but I was like 4 years late. Like the Winklevoss twins, I didn't know about it before. So what happens is that it's because of the circles you're in, right? Is that rich people are in rich circles. So they go to their country clubs or wherever they go, and they're talking about finance. So they're gonna get it first. And they all start investing in it, right? And then like somebody that like works at a factory like in Tennessee, it's gonna be 2 years before they get that information. Yeah. Just in a natural, but if they don't go seeking it, looking for it, it's just for it to flow down from the rich to the upper middle class to the middle class. Because maybe like one person in this rich group is actually connected to an upper middle class people, and they get it into their circles. Then for that information to flow all the way down to the bottom may take years, right? If you're just passively waiting for it, like which stocks to buy or whatever. But if you're actively spotting trends, you can see the markers of trends beforehand and then get in on it early. So that's what another thing we teach in that book. Like crypto, right? Crypto has a 4-year cycle. Stocks have a cycle. Real estate has a cycle.
Yeah.
You know, like if real estate does crash in the next 6 months, it's going to start a new cycle. And most people, like the average person, will see that cycle and they'll be like it's over. And most people would think whatever's happening right now is going to continue to happen. So if real estate crashes tomorrow 40%, most people will say, well, real estate's done. It's never coming back. But the banks, the rich and elite, go and they start buying it at those rates. Yeah. But most people will be like, I'm kind of scared. Like you said, when Bitcoin hit 3,500, you're like, I don't know, man. Or, maybe it won't come back. Yeah.
I regret that. I had money. I was going to buy it, but I was looking at the problem with that whole situation. Dogecoin hit 70 cents, right? Or almost hit 70 cents. I had 100,000 Dogecoin I bought 100,000 Dogecoin for like $250 and stuff before that. I never thought of holding it. That's a whole nother story. But like with Bitcoin, like I was trying to time it. And that's when like I really realized like over time like it's been growing, because like I'm only 24, I still got a lot of lessons to learn, but like over time learning like you can't time the bottom. Like I was like, all right, it's gonna go down like another like $500, then I'll buy like
it's impossible.
You know what I mean? And then like when that happened, it didn't. It went up like another 200. I was like, all right, I'll come back down, whatever. Same thing happened with Tesla. When Tesla was at $400 a share before it did the 7-1 and the 3-1. They did 7 and then a 3, right? I think, or a 5-1 or whatever it was. Before those two stock splits. Like at COVID times where they got it $400 a share. I thought they were gonna go down a little bit more. I didn't buy. I bought later on. I like added to my portfolio later, but like when you see a good opportunity, you gotta take advantage of it, because who knows what's gonna happen,
But like I said, is that when those cycles happen, it happens in almost every type of asset. Those ups and downs happen. But you have to understand that the history and how they work to be able to understand that's coming back. Most people just see it and they're like, I'm not touching that. And the scary thing about it is that during those times, as like something that happens in society, is that like, let's say a real estate dropped tomorrow. Let's say something horrible happened like in 2008, it dropped. I don't know if you remember 2008, you was probably too young, you may. But in 2008, I remember the crash happened. And for like 2 years, all the news articles were saying it would never come back. Like, oh man, real estate's done. The real estate market will never recover in the United States. That's how the media gets you.
Yeah, that's what
they will say.
Yeah.
That's what they will say. They will say that every crash. And then the average person who doesn't understand this, it's a cycle. All this information happens in cycles. It happens. If Bitcoin crashes down, you'll see all these articles. If real estate crashes, all these articles and news people will be telling you it's never coming back. They do it every time. But it's actually part of the cycle.
Yeah.
That's part of it. And I believe it's to scare you away while like the rich people get their stakes in.
That's exactly
what I think.
The media scaring you? Yeah, I agree.
But think about it from this perspective. Let's bring it back to real estate for a second. Rates are moving. They want to decrease inflation. Rates are going to be moving up. It's going to be pushing people out, affordability-wise. Prices I think, have to go down, right? Unless rates don't go further up, which who knows where it's going to go to, only the Fed knows. If the rates stay where they are, prices go down a little bit, people are going to be able to buy houses. So
I don't see how they're able now to average.
But all these firms are still buying real estate left and right, and they're buying single-family houses. Yeah. It's crazy. It's nuts.
But like, if you go too far, man, that's the thing I was telling somebody the other day. I was like, if you go too far with this real estate stuff, it could cause a revolution. And that's one of the, I believe the French Revolution, one of those revolutions in Europe, it was based on like people not having places to live. Like if you push everybody out rent-wise for too long, people won't stand for that. They're playing a dangerous game, you know.
Well,
you can't like keep people in a position like that for a long period of time. Then revolutions and stuff starts from that, right? Yeah. And that's the dangerous situation that we're playing with. Like the average person can't afford these crazy rent prices. I don't see how. Yeah.
Now that you touched base on that, I saw one of your interviews where you were saying, excuse me, that rent is not a waste of money. Can you break that down?
It depends. That's the thing about life, man, is that like people, especially in financial stuff, they want black and white answers. Tell me what to do and tell me what to always do. Should I always get rent or should I always buy a house? But it depends on the situation. I'll tell you, like you're 24, right? 24-year-old, one of their biggest, a 24-year-old, I don't know if you're married or not, I assume not. No kids, no married. One of your biggest assets is your ability to move, mobility. You can do whatever you want. You can leave California tomorrow. You can start a new life. You could bounce around. That's a big asset. I can't do that. I'm stuck in Florida for the next 10 years probably. I can't just move to New York, But you can. That's one of your biggest assets. So when you buy a house, when you buy a house, you got to put a down payment down. You're basically stuck in the house 3 years before you can break even. So you're stuck. So what you're doing is you're trading a long-term asset like a house for your mobility, right? But if I'm like my brother never, he never owns a house, but he's moved jobs every year and he's got like a $50,000 raise every year for 10 years.
Wow.
And he's making like $400,000 or $500,000 a year now, And he started at like 40 because he's younger than me. So for 10 years, he just moved to different jobs, whoever paid him the most. And we had mobility, he paid rent the whole time. But if you look at his net worth, it's way higher than somebody who may have bought a house when they were like 25, when he started his path of like changing jobs when he was 25. So it depends on your situation. Like that mobility, the mobility in your 20s and early 30s is very valuable if you leverage it right. And that's what rent provides you, mobility. Like I could stay here for a year and I could just leave, Rent more, houses don't give you that much.
Yeah, no, like you said, certain people just can't pick up and go. I can't pick up and go.
That's what I'm saying.
You know what I mean?
I think that like, what you're saying, I remember a lot of conversations that I previously had. So one of the conversations I had with a client of mine who, whatever, was that they didn't want to buy, and I was convincing them. I was trying to convince them, like, oh, you gotta buy, and they were like, no, like I like the flexibility. And I was like, what the hell are you talking about? Like, why would you even think that way? But like when you explain it that way, like it brought me back to that conversation I had with them because that makes a lot of sense. But I think that like it goes both ways. Every single situation is different.
It's situational based.
Every situation is different.
Exactly.
That's actually a less likely situation of what we just talked about, but it still exists.
Yeah.
Most people would probably be better off buying a house, if you like numbers wise.
Yeah.
But there's a subset of people that wouldn't be,
Yeah, I think you're 100% correct. I think that like every single person, like say for example, like right now, like everybody I'm speaking to on the phone about these rates and everything going on, if they can afford a house, great, and they want to get into it. All right, you want to buy a house right now? If the rates go up higher, let's just say for example, somebody's at like 6.5%, right? If the rates go up to 10, 12%, you're good, you're fine, right? You're okay, you're in the house already.
If the rate locked
down. Yeah, if they close on the house at like a 6.5% rate, the rates go down, great, you can refinance. You got to give them both scenarios because like cause sometimes like I'm seeing a lot of people who are like trying to sell them houses where like they really can't afford it, but like they're just pushing like, oh, you're gonna be able to refinance later. Yeah. But like that's not just like a blanket that just covers everything. Exactly. Like if that person's gonna be house broke, they should not be buying a house in the first place.
100%. And you touched on something very important too. When you're making those first 3 years, you are paying a lot towards interest. And that's with anything, credit cards, auto, whatever the case may be, you're paying towards the interest mostly.
Yeah.
So back to one thing I wanted to touch base on was you said something like passive income is easy. Can you give like some streams or avenues that you can make income on?
Dividends is easy. Staking your crypto is like a dividend on your crypto. That's an easy one. And rent, of course, but these are things that require capital at first. And there's a lot of other things too. It's like a lot of electronic stuff, but sometimes a passive income stream could be passive if it requires a tiny bit of work still. So there's a lot of like internet businesses you can start that don't require that much work. There's businesses you can buy on, there's a site called Flipper, and there's a site called Empire Flippers. And I've done that in the past too, where you buy already existing businesses. And you can do that with an SBA loan, right? So you get an SBA loan, they're like, I don't know what they are, like 4% now, 5%. It may be, that was back during the pandemic, it may be a little bit more, but SBA loan is over 20 years. You can get it up to over 20 years, and it's pretty easy to get. You take that loan and you buy already existing business on like Empire Flippers, like a drop shipping business or FBA business, something like that. And whatever you pay per month on the SBA loan is going to be less than what your profit is in the business. And then if you get one that has a low level of input or work, you got a passive income stream instantly. That's a thing that I've done in the past, and my business partner does a lot of, is buy already existing businesses on Empire Flippers, and get a loan and pay for it off, and to make sure that work effort is not as high, and then now you got a passive income stream immediately. Right? You just got to manage paying the loan off and working with the business.
One of your videos that was shared the most, I feel like, was the Rolex video that you did. Because so many people shared it. Like, shout out to Lou. I saw him share it. I shared it. Like, so many people were sharing it. Rolexes are so hard to get now. Yeah. They're so hard to get.
And that's another thing, man, is that like you got to break that traditional thinking. Like, it's that black and white thinking, right? That says that you never buy luxury goods, and never buy this, never buy that. Like, with the Rolex, something about the Rolex is that's part of. I used to talk about that in my book. That's one chapter, like part of a chapter. It talks about the luxury goods argument online. Is that people want black and white answers. Luxury goods always bad, cheap goods always good, or the vice versa. But there's instances where luxury goods make sense, like Rolexes, right? Is that I got a Rolex here. I bought it. It was like 21,000. It's worth like 26 now, right? And the thing about this, I can pass this to my kid, and Rolexes hold their value over time. So do Louis Vuitton bags, certain types of Louis Vuitton bags. So why wouldn't I pay? Like, I got a duffel bag when I came to New York I used, right? It was like $2,700. But that bag holds its value, right? If I buy a Walmart bag, first of all, it's gonna break more easier. Second of all, is that as soon as I buy it, it's zero, it's worth zero. I may pay $80 for that bag, it's zero now, right? I can't resell that, but I can resell, if I chose to, I'm not saying I will, but I could choose to resell that bag, and I'd get roughly the same amount of money because Louis Vuitton and other luxury goods intentionally raise their price every year. So to get the same bag that's new would cost a lot more than my bag. So people would prefer to buy my bag for like either the price I paid or a little bit less. I got another Louis Vuitton bag I bought in college back in 2003, and I paid like at the time like $600 for it at that time. It's another duffel bag. It's very old. I don't use it that much. But I could still sell it for that same price today.
It's vintage.
Because it's vintage, and and people and it's still a Louis Vuitton duffel bag, and people would pay $500-$600 for it. That means it's held its value for almost 18 years.
And
it held its value.
Certain things too.
And
it comes with obviously like having that luxury like good,
that too.
And then that like you walk into a room with Rolex, if somebody who knows Rolexes, they're gonna start a conversation and be like, oh. Like nice watch.
People will,
it's a conversational piece.
And that's what I'm saying is that these things do help your image. And that's the reason why you see real estate agents having nice cars. Because people trust people. Because I mean, and I may ruffle some feathers here. Some people don't like these kind of conversations. They don't. But if you don't know anybody from I meet these two real estate agents. I don't know either one of them. I never met them before. I have to judge them by how they present themselves. That's the only thing I know. Right. I never met them before. So if one gets out in a beat up car, one gets in a nice car with nice clothes on, most people, regardless of what they tell you, will trust the person with the nice stuff on more. If you go to a lawyer, for example, you go to one and he's wearing like an old beat up polo and jeans. Yeah, I can help. His office is all old in a strip mall somewhere. Or if you go to another lawyer, he's in a nice office with a $2,000 suit on with a $20,000 Rolex. And he said, who are you going to trust more? You're going to trust that lawyer that at least took the time to present himself right.
Because it screams success.
You don't know anything else. Now later on, if you know these people more, you may trust the guy with the polo because he knows what he's talking about. But initially, you have to trust what your eyes see, and everybody thinks like that.
Yeah.
Regardless of what they say, most people, if you ask them, they'll be like, "Nah, I don't think like that." I go by what. No, they don't.
Yeah, no.
They go by what they see.
Yeah. And there's a reason why everyone wants these goods, right? Like, I don't think it's like a hidden fact that people want these luxury goods and stuff like that, because that's just life, right? Like, people just want that, you know?
Yeah.
So, you know, we can't hate on that. I can't hate on that.
No. And they also, like, financially, it's also, in some cases, a good decision because they hold their value.
Yeah, 100%. One more thing that I definitely want to touch base on is, what do you think about NFTs? You done with them? You still going on them?
Nah, the NFTs, most people understand, like, know them as the art, you know, the Bored Apes, stuff like that. But I think NFTs has a big future in, like, even in real estate. Like, NFTs has a future in more like real assets. Like, one of the hardest things in our society, and most people don't realize this, is from a data standpoint, is like managing like ownership of things. And you guys in real estate, you know how hard it is to do a property title search. Why is it so hard? Why do you have to pay? Shouldn't it be just a database you look in? Nah, it's not like that. Why wouldn't it just be a database? I put in somebody's name and all their properties come up. It's not like that. It's very, you have to pay a company to do all this stuff. Why would it be like that in 2022? Because our society, the way that we manage ownership of things is different based on the thing, and it's also very like disorganized. Yeah. It works for us, and we can get, but it's NFTs will solve that process. Like ownership of cars, houses, stuff like that. It'd be a lot easier to manage that. Like most of our laws revolve around proven ownership of stuff.
Yeah.
You know, who owns this? Who owns the copyright to that? Who owns like artists fight in court about who owns the rights to this? NFTs would solve all of that. So that's the true path, I think, for NFTs going forward. I think the artwork was just a good use case to show people what it can do, and it's going to go on farther and do all that other great stuff.
You think my bunny buddies, or whatever they were called, that I bought for a few $100 are worthless now?
Worthless.
I think that 90% of NFT art is going to be never come back.
It's all right.
Damn.
It's a cool looking bunny.
Like ICOs, you know, it's the same thing. 90% ICOs never came back. It's just
Yeah.
and in 2024, it's I don't know what it is, it's gonna be some exotic new instrument, and everybody's gonna be talking about that. Maybe LFOs or something, I don't know. But it'd be something, and everybody's, oh, this is the new thing, and everybody buys it. But we talked about trends, be on the opposite side of that, though.
One thing that Jude said to us last week was how he looks for, like the Starbucks example, he looks for a Starbucks in a certain area.
He told me that too.
Yeah, and like, and it's funny.
You know that it's being gentrified.
No, but we appreciate everything.
A lot of gems in this episode. Appreciate you flying in from Florida.
No problem.
You know, anything else you could leave us off with?
That's it, man. I appreciate you guys having me. It was a great conversation.
Thank you for tuning in to the Real Estate and Chill podcast with James Chaudhry and Kevin Iglesias. Don't forget to like, comment, and subscribe. Also, share this with your friends, your enemies, your mother-in-law. No, seriously, this podcast is so fucking good, you might want to tell your ex. See you next time.